Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KONTOOR Brands INC quarterly report. KONTOOR Brands Inc. offers a diverse range of businesses and services across various segments. The company's primary offerings include designing, producing, procuring, marketing, distributing, and licensing denim, apparel, footwear, and accessories, licensing and selling apparel under the Rock and Republic brand name, selling products through multiple channels, plus mass merchants, plus specialty stores, plus mid-tier and traditional department stores, plus company-operated stores, plus online platforms. These services are provided across various regions worldwide, including the Americas, Europe, the Middle East, Africa, and the Asia-Pacific. The decline in KONTOOR Brands Inc. (KTB) stock price over the past year can be attributed to several key news events that created negative sentiment among investors. The most significant contributors include the Q3 2025 earnings report, which saw a 9.91% drop despite exceeding EPS expectations due to revenue shortfall concerns and acquisition-related pressure on operating margins. The S&P Global Ratings downgrade in March 2025, which revised KONTOOR's outlook from stable to negative due to the planned Helly Hansen acquisition and increased debt levels. The Q4 2024 earnings report and 2025 guidance, which fell below consensus estimates, leading to a 6% drop in shares during pre-market trading. These events collectively created a challenging environment for KONTOOR Brands stock, contributing to its decline over the past year. The primary drivers of revenue growth or decline for the company can be attributed to a few key factors. On the positive side, the Wrangler segment experienced a significant increase of 6% in revenue, reaching $744 million, driven by strong sales in North America and Europe. This contributed to the overall company revenue growth of 4%, reaching $1.23 billion. However, the Lee segment saw a decline of 3% in revenue, dropping to $486 million, primarily due to soft sales in Asia and Latin America. These contrasting trends highlight the importance of regional market performance in driving revenue growth or decline for the company. The company's net income experienced a significant decline between Q3 2024 and Q3 2025, dropping from $70.5 million to $36.9 million. This decrease was also observed when comparing June 2025 to Q3 2025, with a drop of $36,925 in net income. Unfortunately, the provided information does not offer any insight into why this decline occurred. Profit margins are not available for certain periods and were not reported for Q3 2024 or Q3 2025, making it difficult to assess their impact on the company's financial performance. The company is generating a significant amount of positive operating cash flow, with $167.5 million reported for the 9 months ended September 2025 and $234 million in the most recent quarter. This indicates that the company's core business activities are producing sufficient cash to cover its expenses and investments, positioning it well for future growth and financial stability. The company's financial performance indicates a significant change in its interest expenses. According to the extracted summaries, interest expenses have decreased by 14% on page 5. This decrease is attributed to lower debt levels, suggesting that the company has managed to reduce its debt burden. However, it remains unclear whether the total debt level itself has changed significantly, as this information is not explicitly stated in the provided summaries. Management is optimistic about the company's outlook, citing strong revenue growth driven by the success of the Levi's brand. However, they also acknowledge potential challenges ahead, including global economic uncertainty, intense competition, and supply chain disruptions, which may impact future performance. The company's financial summary reveals significant investment in acquiring a new business during the 9 months ended September 2025. A total of $889.9 million was used for this purpose, marking a substantial acquisition. Notably, there were no divestitures mentioned in the provided summaries, indicating that the company has expanded its operations through this single acquisition. The company has a history of paying dividends and buying back shares. In 2024, it paid dividends in the amounts of $27,844, $27,888, and $27,574 respectively in March, June, and September. Additionally, it repurchased shares in the same periods with quantities of 20,105, 25,166, and 40,406 respectively. However, there is no information available on dividends or share buybacks for fiscal year 2025. Concerns over inventory buildup and supply chain disruption. The financial summary highlights a pressing issue for the company: potential supply chain disruption. A closer look at page 5 reveals that the company's supply chain is indeed vulnerable to disruptions, which can have far-reaching consequences on production and delivery of its products. This vulnerability raises concerns about inventory buildup, as an interruption in the supply chain could lead to stockpiling of unsold goods. Furthermore, a disruption would not only impact the company's bottom line, but also compromise its ability to meet customer demands, ultimately affecting its reputation and competitiveness in the market. That concludes the financial summary for KONTOOR BRANDS INC. Feel free to comment below, and I will be happy to answer them when possible.